Tomas, we are back, my friend, but enough out of you. We got this man, Chris Vecchio, in the house. How are you, Chris?
I'm doing great, gentlemen. My New York Jets beat the vaunted Philadelphia Eagles this weekend.
And that's why we call this segment "Let Me Explain." So, can you explain that to me? How did that happen?
So, what are the Jets now? 2-2, 2-3?
3-3. A whole 3-3.
Are they 3-3?
Man, I'm telling you, if they had a quarterback.
Yeah, 3-3. They're amazing. You know what? I watched the Jets play. I watched a little of that game. First of all, they got lucky. And
let the man have his win. He beat the Eagles. I think they were the last undefeated team, weren't they?
And the 49ers were too. They lost.
Yeah.
But I watched the Jet game, part of it.
But I think it was a late game, so I think they were the last one. But I'm not sure.
Yeah, it's really hard to watch the Jets. It is. It's a little hard.
I thought you were a Jet fan.
I am. The toughest part of watching the Jets is from September through January, so...
We know your pain, so we can't say much.
What you got for us today, sir?
We're in the middle, or rather the start of earnings season right now, and through the data available through last Friday, it's actually been a pretty good earnings season thus far. 84% of companies that have reported have a positive EPS surprise, and 66% of companies in the S&P 500 have a positive revenue surprise. What's notable about the earnings that have come out this far is that we could actually be looking at the first year-over-year earnings growth since the third quarter of last year. Fourth quarter, first quarter of this year, second quarter of this year, all have seen negative year-over-year earnings growth. And that's been one of the major sticking points for a lot of bears out there when they look at this rally that we've seen in stocks in 2023. It's basically just been one big multiples expansion. But that may be turning the corner now, which actually helps substantiate some of the gains that we've seen, and in turn sets us up for what could be a nice end to the year. I know seasonality is regarded as, astrology for technicians, and technical analysis is considered astrology for market participants altogether in some circles. But the fact of the matter is that the S&P 500 and both the NASDAQ tend to do very, very well in the fourth quarter, and they tend to do well starting now. It's the second half of October through the end of the year that typically produces some of the biggest gains that you see of all year long. In fact, the fourth quarter itself has a 5.5% return over the past decade for the S&P 500. So a better than expected earnings season coupled with the seasonal tailwinds that we have typically in these markets could be setting us up for a nice end to 2023. The economic data is also supporting the move. I know that there was a little bit of concern this morning coming out of that retail sales report. Not because it was bad, but because it was good. If it's good data, it could lead the Fed to do more. Ultimately, I personally don't think the Fed is going to do more. We've heard from a lot of these Fed speakers here over the past, say, 10 days, where they're telling us that the bond market has done the heavy lifting for them. Tom, to your point, the Fed follows the bond market, not the other way around. And the Fed, in this case, is following the bond market, saying that those bump in rates is enough to prevent them from having to levy another rate hike at either their November 1st meeting or the meeting that comes up in December. Any event, this to me is sizing up what should be a focal point around what's happening in the bond market still. I know that picking bottoms is often a fool's errand here. The bond market action that we've seen the past 2 days is not comporting with a bottom being in place. And nevertheless, we have seen a state of where yields have reached multi-decade highs. We've seen a state where volatility has expanded significantly. I personally still think the trade is looking at selling options down here, obviously in a risk-defined fashion. Short put verticals very much should be on people's radar right now. Bottoming processes do take time, and it's a process that I think is still just beginning to unfold.
Why can't we have one of those V-bottoms that we used to see? Why does it have to take time? But I mean,
first of all, I'm not.
I need a V-bottom.
So I'm trying to just process what you just said. I'm not sure if that was a question or if you were. I'm just saying I'm not sure if you were asking me a question or if you were like kind of just commenting on the state of the market.
It's called "Let Me Explain," not "Let Me Ask."
Okay, that's good because
well played.
You were explaining it. The only thing I would. I'm glad everybody's finally coming around to, I'm glad everybody's finally coming around to see that the the bond market leads the Fed. I mean, I think I started that campaign about 5 years ago, and I think
I was gonna say 35 years ago.
we finally got the world to believe in us. But crazy how slow the process has been. Just from a talking point, the only thing that I'll comment about what you just said would probably be with respect to earnings, and my comment is just going to be that I don't know if we've seen enough to say that this is really an interesting earnings cycle yet. In other words, the companies that have reported so far are pretty,
fringe players. I mean, I know you got Goldman Sachs as a name.
Yeah, I mean,
but they're not.
J.P. Morgan's not a fringe player.
No, they're $100 billion companies. I mean,
right. But I just don't think they're that. They don't carry the market.
Movers.
Yeah, they don't carry the market. So the firms that we've seen so far, come out with earnings. Listen, there's been no downside surprises, that's for sure. But at least at this point, there's been no downside surprises. But there hasn't been. It's been a slow cycle as far as the number of trades that we've made earnings wise so far, and I haven't seen any outliers to the upside either. It's pretty much been pretty tame.
Yeah,
I'm trying to think what has there been.
Volatility hasn't spiked. He had that one move on Friday with volatility. That was it.
Volatility's been a little weird. I would say if there's anything about the most recent market move, it has to come back to just the level of volatility in bonds. Every day we've been moving between 1 and 2 points net on the day with very little reversals or two-sided action. Like the weirdest thing is we go up a point, we go down a point. We go up 2 points, we go down 2 points. Like it's been very back and forth with everybody. I feel like everybody's trying to figure it out and feel it out and just.
Well, you got some chip stocks right now, like Nvidia and AMD. Now you got Tesla down 5 and change, almost $6. So you're starting to see a little bit of crack in maybe some of these NASDAQ stocks.
Well, the trade we've been talking about for the longest period of time, which is probably at a massive multi-year extreme, is NASDAQ versus Russell. The Russell's up $10 today, the NASDAQ's down 200. So for the first time, it's actually going our way. But the pain that's been inflicted on us for waiting for this trade to go our way is just, it's been brutal. So I can't even claim that this has been a good trade,
right?
Even though it's a good trade today. It's been a disastrous trade waiting for this to happen. And then just looking around the rest of the marketplace, is there something out there, Chris, that is there something out there that you're, I don't know.
That's found your attention?
Yeah.
In terms of news flow and data right now, not really. I suppose TSM later this week could be an interesting earnings release, but we're getting into the window whereby markets tend to quiet down. We've run through the major economic data releases. We're entering the Fed's communication blackout window, which thank God, because there are 21 different Fed speeches on the calendar this week. So more or less culminating in Fed Chair Powell's comments on Thursday at the Economic Club of New York. And then we go into that blackout window where we won't hear from them again until the Fed meeting on November 1st, which I think most people will be thankful for. Though we can't discount the fact that we're going to get one of those reports from Nick Timros at the Wall Street Journal telling us what the Fed is going to do so we can anchor expectations correctly. Instead, the price action today is unfolding in a manner typical to what we had seen prior to what happened in Israel 2 weekends back. What I mean by that is at the end of last week, you saw this geopolitical war hedge more or less put into play. Dollar rallies, yen rallies, gold rallies, bond rallies, stock falls off. The start of this week, what do we see? Stocks are up, bonds are going back down, dollars down, gold is down a little bit. Today, it's now back to stocks and bonds moving in the same direction. This retail sales report showing better than expected consumption for the month of September, rekindling some of those concerns that the Fed may need to do more, which again, if you've been listening to what the Fed's saying, they're telling us that they're not going to do more. So let's not fight the Fed here. We're now seeing that relationship prior to the Israel-Hamas conflict is back in vogue. And so bonds are down, stocks are down. We're seeing that ultimately the dollar is getting a little bit of a tailwind. That's a switch that I think is going to be flipped a lot in the coming days. We may have a little window in which that's back in focus because President Biden is heading over to Israel, and it seems like U.S. diplomatic efforts have been stepped up to ensure some sort of humanitarian corridors coming out of Gaza, and therefore Israel's not going to launch their big ground invasion of Gaza before President Biden arrives. But once we head back to the end of this week, we get through some of these earnings releases, Biden leaves the Middle East, and then we head into another weekend. I wouldn't be surprised if that relationship turns on its head once more, where people are deleveraging ahead of a weekend where they can't manage their event risk. We see gold get bid, we see crude oil get bid, we see bonds get bid, and traders take some of those chips off the table with respect to the stock market. It's going to be, we've had a very solid relationship between stocks and bonds the last few months. Plain and simple, the correlations between ZB and any of the four major equity index futures have been north of 0.85 for better part of, we'll go back to the middle of August here. That's starting to break down here, and I don't know if that's going to be an old reliable telltale signal that traders can rely upon moving forward, just because you now have these two competing dynamics in play that can flip-flop on a daily basis depending upon the news headline. So I would treat every asset class now in an individual bucket as opposed to saying, well, if bonds are bottoming, then stocks can go up. That, unfortunately, is a view that needs to be thrown to the waste bin of recent history.
I agree with that for sure. I agree with that for sure. I do think that each sector is man for himself right here. I don't think there's any. I don't think there's any correlations you can play. The pairs trades, even though they're a reduction of risk and even though they extend your duration,
hasn't looked like it's a reduction of risk if you've had it on the other way. It looks like it's a risk-on trade for sure, because it's only moved in one direction. Today, you finally got a little bit of
there has been no two-sided. There's been no two-sided action in any of these pairs.
You couldn't scalp that pair if you had it on wrong.
Yeah. I mean, like people are going, well, the yield curve trade finally worked. Well, it took a year and a half. I'm like, okay, a year and a half doesn't count. Like that's not a good trade.
That's an investment, not a trade.
Right, exactly. The Russell NASDAQ, it's taken a year. It hasn't worked. So, I'm kind of. I just bought some more bonds at 18. I'm kind of like no man's land here. We're flat the market. Let's see, delta wise, we're flat the market right here. Maybe we're just picking up a couple long deltas on this new low, but we didn't have any Nvidia today. I had to look at the bright side to today.
Sure.
We didn't have Nvidia. We are long the Russell. We are short the NASDAQ. That's the good thing. We're way too long bonds. That's the bad thing. Yeah.
Bond down 125.
Yeah. That 125 surprised me. I don't think we're getting through the 109 level.
I don't even want to hear it from you.
I don't think we're getting through there.
I don't want to hear it.
I think we're stopping there. That's worst case. But I got to do something by business. I got to find. I need a trade, Chris. I need something to.
Well, you have the trade on. You have the NASDAQ.
Yeah, I know. I need something else to do today. I need to get excited about something. I need to find, like. I think the NASDAQ, and I've been saying this for a while, is in for a really rough ride for the next however long it is. I don't care how long it is, however long it is.
You got Nvidia down 32 now. I mean, that's a 8-ish% move. It's a big move in Nvidia. You got Tesla down almost 6. You got Microsoft down 4. So AMD down 4. You got some movement.
We haven't done anything in Nvidia. We have no position on in there.
Nvidia has earnings on the 15th.
I just sold some puts in Baidu. I bought some bonds at 18, sold some puts in Baidu. Come on, Chris, I need some help here with some ideas.
Selling puts in Baidu is a real risky gambit because of everything that's happening in China right now. I mean, this property market bubble, it's continuing to let air out of it slowly. And of course, the CCP is primary objective is to hold on to power, right? So they can't let the property market collapse. It's a fundamentally different impact on the Chinese economy than it is here in the United States. Real estate in the United States is 17% of our GDP. In China, it's closer to 32%. In America, 30% of household net worth is tied up in your homes, whereas in China, it's closer to 70% for individuals. And so a collapse of the Chinese property market, if they were to just let it go belly up, it could threaten to unmoor the social stability and their grip on political power. So they're not going to let it go face first down. That said, though, they don't want to necessarily pick winners and losers here. They don't want to use good money, throwing it after bad, and filling in the holes of these companies like Evergrande or Country Garden. And so you now have this middling path where the news will continue to be bad, the pain will remain there. You're not going to see an outright collapse, but where's the upside right now? I look at Baidu, I look at Baba, I look at FXI, the large cap Chinese ETF, and the technical setups here are absolute garbage. You have this macro environment that is not supportive whatsoever. Sure, they can reduce their reserve requirement ratios and move things along the margin in terms of interest rates offered to the private sector. But there's no demand right now because people are watching their property values go down, down, down. And when property values decline, as we saw here in the United States in 2007, 2008, it leads to somewhat of a balance sheet type recession where people just scale back spending or investing for a prolonged period of time. So I can't look at anything China and take out anything that resembles a bullish point of view. If it's a day, a week, a month, a year, I don't like it at all. There's nothing to like there from my point of view.
I will tell you what so we finally found an area that we can talk about debate-wise a little bit. I'll tell you what there is to like about China. What there is to like about China is the same thing that is to like about digital assets. China is a binary play. China is a risk one to make two or three. That's what there is to like about China. China has China has a very measured downside risk. I feel like it's almost like it's a given, and the upside is multiples of the downside. So where China's sitting right now relative to U.S. stocks, just based on price, China is very cheap, and so the upside is multiples of. So the whole reason that you buy Baidu or Baba here, the whole reason I'm long Baidu and Baba is because I'm risking one to make two or three. And the problem with certain U.S. stocks is that you're risking, one to make one, or risking one to make a half. So the whole reason for buying China is this, again, the same reason for buying digital assets. It's interesting here at these levels. Now we jump over to Nvidia. Tony, this is the first time Nvidia IV rank has been up over 20.
Yes.
So Nvidia is back on the dance floor. The other thing, Chris,
some time,
which is important for us, the way we think, is that when stocks like Nvidia and AMD have big moves like today, the reason why they're having a big move is not really that important. What's important is that all of a sudden, the liquidity, like Nvidia's traded.
Liquidity is, but Nvidia is just off its highs. It's a lot different than Baidu, if you want to say, at least from our style of trading.
No. Baidu, I said Baidu was a play that it's a pure binary play that has, it's a pot odds play based on some binary event.
This is a binary event too.
Nvidia's different. Nvidia is a stock that has not been played because the IB rank's been really low, but today it's traded 21 million shares in the first half hour. Now, what's interesting about that is Nvidia, which has markets that you could argue are almost as good as Tesla, but about a penny or two worse, today is going to have markets that are the best markets. In other words, today is going to be the one day when whatever it is you want to do in Nvidia, you can do it basically a penny around mid-price.
Its average volume's about it's under 50 million shares. It's traded just about half of its volume in the first
3 minutes.
Right.
Yeah.
So
you have high IV rank. You've already taken, when stocks go down 30, you've taken a lot of outlier risk out of the equation. So today is the day when this is just my call. You go to November and you really have to look at the 16 delta.
It does have earnings coming on the 15th, 2 days before expiration.
In November. Mm-hmm. Yeah. I think you go to the 16 delta strangle here, and it would not surprise me if it trades 1 penny around mid price.
Yep.
Let's take a look. 1 penny around mid price, move it. 1 penny around mid price. So that's the reason you traded Nvidia today. So I was able to do the 16 delta. That's the 380, 490 strangle. Rich as hell. 1 penny around mid price. That's the whole reason for. And you've taken $30 of outlier risk off the table.
Okay.
It's just out. It was
Still
gone.
got market risk, but sure.
Yeah, of course you got market risk.
Sure.
It's off the table.
Well, Nvidia has this potential U.S. export ban to China in play for their AI GPUs. I think what we should talk about next week, though, is how we can take advantage of trades in some of these weight loss drug companies like your Eli Lilly or your Novo Nordisk, because Ozempic, Wegovy, these are clearly starting to creep into other companies' expectations. I don't know if you saw PepsiCo, for example, mention that they have concerns that consumers are going to be eating less food moving forward thanks to all these weight loss drugs. And so it's kind of becoming like an AI story unto itself, where you heard, company ABC out there saying, oh yeah, we're going to implement AI into our productions. Kroger, the grocery chain, for example, mentioned this in an earnings call earlier this year. We're now beginning to see this weight loss phenomenon creep into unrelated companies' earnings. I think that could be one of the more interesting narratives that we play out here through the rest of this year.
You still order the food, you just don't eat it. That's what I'm told on Ozempic. I mean, your eyes still want to eat everything, you just can't. That's what I'm told.
Love about like companies like Pepsi is
I did a covered call on Pepsi closing in a day, made $100.
they have
Option podcast.
they jump
every
on
Tuesday and
these
Thursday.
things like, oh, people are going to be drinking less Pepsi,
Yeah.
or eating less food. Like they use it as an opportunity. They're so public. Like I would sell Pepsi if I was long it. I would have sold Pepsi on that news too, based on the fact of just how they played it. Because it's just a horrible play. Like in terms of
awful.
Yeah, horrible PR move. It's just I hate that stuff.
So a good PR move, Sazov, now that this NASDAQ Russell trade's gone your way in a big way today, you have to admit this is the biggest one-day move you've
What's
had in
your
it.
point?
Can we get a better lunch now at the offices? Do we have to have Jimmy John's? Is there any way we can, now that it's going your way, can we?
We had Jimmy John's yesterday.
You loved it.
I love Jimmy John's. It's really good. But can I tell
That's
you,
what I'm dealing with.
Dr. Dad has showed me a picture of Jimmy John, whoever the guy Jimmy John is. I forgot the guy's name. But he was drunk and naked on a yacht somewhere. And I guess the pictures
Man after my heart.
I guess the pictures all over the internet. And after I saw that, I wanted to throw up. So the Jimmy John's didn't go down that well. Have you ever? I guess the guy got a little ahead of his skis.
Okay. Parting words, Chris. Even the S&P is down 31, NASDAQ down 205, Russell up 8, and the Dow down 100.
And the bonds, which we bought at 18 and sold at 24, are now trading
927. Let's not
927. I know, and we're going to offer the other ones out that were long, so we'll neutralize ourselves and reload at lower prices.
Okie dokie.
But I'm just bringing it up, Mr. Batista, that
You're allowed. You're allowed.
we're trying. Okay,
We're trying.
We're trying not to negative scalp.
Parting words from you.
Closing thoughts. I want to reiterate what I said earlier. The relationships that we've seen in play over the past several months, they're going to turn on and off like a light switch because of all the geopolitical event risk out there. Don't be surprised if you see another round of deleveraging heading into the weekend, particularly if there is no fruitful talks resulting from this Biden-Netanyahu meeting that's supposed to take place tomorrow in Tel Aviv. It's certainly a bad situation. Hopefully it does not get worse for anyone.
Very good, my friend.
There's never been a situation, there's never been a war, or especially a war against terrorism, that doesn't get worse. Like if you think about history and you go into this is really early stage. There has never been a situation where it doesn't get worse. That's the sad part. It's going to get
bring
worse.
us down. We're going to take a quick 90-second break. We'll come back. We got more Tasty Live after this with a market measure. Thanks, Chris.